Classic examples are New York Stock Exchange and NASDAQ and all those things where all the security trades, and then obviously we buy or sell based upon whether what we feel from the market. Most of the time people buy from emotions, but if you do all the analysis, you might be buying or selling based upon your analysis, not the sentiments in the market. So primary and secondary markets. Now there are multiple types of companies operate in the market, and they vary from different things which they do. I'll cover some of those, in starting with your financial institution, which can be categorized into investment banks, which are actually into issuance of security, underwriting securities, and things like that. Those will be in US, they will be Morgan Stanley or Goldman Sachs, somebody like that. Then you have commercial banks like JP Morgan Chase, and they normally issue loans, facilitates different kind of securities and bonds and things like that. And they are also one of the biggest one in United States. Probably JP Morgan is the first company which has the integrated offering in all segments of retail banking as well as capital markets. Then comes your central banks, which normally guides the rates and things like that, and oversight for money supply. That is something which is normally done by Fed. So in US it will be Federal Reserve, in Europe it will be European Union Bank and things like that. The next one is your stock exchanges, where you buy or sell securities. So it can be a simple stock exchange like NYSE or NASDAQ, and then obviously you have individual trading these days, electronic trading systems like E-Trade and others, which ultimately connects to the stock markets. People think it's real time, but they are actually connecting to the market and within a fraction of seconds. They are not live, I would say, but they are as live as for a retail investors. Then you have asset management companies and investment firms. So asset management companies are normally mutual funds.